Hi, welcome to the Market Alert for Thursday, the 26th of January 2017. So yesterday, just going to fast forward, this is the pre-market session, and I sent a note out saying the market was likely to go through the 20,000. It was in this area here. You could see that it was starting to move to the upside. The purple line is the all-time high, again just marked up on the 5-minute chart. And then the market went through, and then we start the session. We get a potential short, we get a long. The long takes it, which is no surprise really, because obviously they've got through. They want to try and keep the market through now. You can see big increase in volume and activity there. This one goes on just to hit the scalp. We've got the crude oil inventories out shortly after, and those figures are released. Actually, I don't know what the figures are. I've not actually looked at that one because, as I said in the note I sent out, I'm dealing with other things as well at the moment and had to leave. But you can see the short side is filled there, and there's a pattern here. This is then followed by another buy signal, which is a winner. So the first short, the market's gone through 20,000. You know you're not going to get short off this straight away, because the idea behind this is to keep drawing people into the market to offload more, like we saw with Goldman Sachs, JP Morgan and others, which I spoke about yesterday. So they're going to keep the market moving if they can, and as I said for weeks, that you wouldn't see the Dow through 20,000 until Trump was inaugurated, and now we've got that. He's signing executive order after executive order, the wall's going up, there's all sorts going on at the moment. But one thing that is curious and is conspicuous by its absence, and that's the Fed chair. Nobody's seen the Federal Reserve. There's been no meetings or anything since Trump was inaugurated. I don't know where they've gone or what they're doing. I know there's no love lost between Yellen and Trump, and no doubt he's got somebody else earmarked for the job, which is a relief for her, because she can now escape without this lot falling apart around her and on her watch. So we get another short here, but we've already been warned here that the shorts are not really working. And of course, this one isn't a valid signal anyway, because the crude oil figures are out. But you'll notice it already sets a bit of a precedent here, because we get another short, and this one then also is taken out, which is there. So again, the short fails. Market becomes sideways. That short's not filled. This short is filled. We're now above the 20,050 level. Market comes back and finds support there. We then get a buy signal close to the end of the session there. So you can see how the shorts have been failing. And if we look at an up-to-date picture, this is the complete picture. You'll see the market is continuing to move higher through the 20,100 level as I record this, and in the daily chart you can see precisely what's going on. Again, this volume not really worth looking at. Let's take a look at the real volume. This is a picture of yesterday. Now you're probably looking at this and thinking, well, why is there a gap in this? Let me just make this a bit wider so you can see how the market's jumped. That's because this chart, and this is why I love the old data, as it were, no overnight prices, so it doesn't take into account the move up in the pre-market session. Now, in the former years of trading, this is what would be known as a gapped up bar, a gapped up loaded up bar, we used to call it, because if this has got very high volume, we won't find out until tomorrow, because the volume is delayed by one day as well by the New York Stock Exchange, which most people don't realize either. Then this will give us a clue as to how much more this market's got. I don't know if it will actually light up. It won't light up yet because we haven't got the volume to go with it, but it will be this one here if it does light up. But like I say, we'll have a look tomorrow when we've got the volume, because I need the volume for this as well. So we've broken that 20,000 psychological level. It's a case of how much further through the market will go. It can go for a while, it can go on fresh air, but at some point it's going to turn, purely and simply because of the implied volatility. Down at 9, every time we get down to these lows, never failed before since 1994. Can't give you the date or time, but the important thing here is to keep the market moving to the upside at the moment for Trump. until he's put everything else in place, got the people in place, and then we'll start to see things unfold. So just because it's closed above 20,000 doesn't mean to say it's going to come crashing down immediately. 20,000 is going to be a main psychological level now as well, on the basis that prices do come back down following any sort of selling coming into the market. That's going to be a major floor of support for the market. So 9% on the implied, that's dropping down nicely, but still not a low. We had an 891 in August, so we can go a little bit lower yet. Right, that's it for today. Well, let's see what happens. The market's still moving higher in the pre-market and overnight session at the moment. And one thing I forgot is the news, isn't it? So let me just go back. Let's just have a quick look at the news. Mainly to see if there's any Fed people out. Nothing, no, just new home sales at 3 p.m. So that's it as far as news as well. So again, no sign of the Feds at the moment. Very interesting indeed. Right, that's it. I will see you in tomorrow's. As ever, thanks for watching.